market, pre-regular trading hours market, that is.
Can you post the link to your chart to that
Yep,
one you got whenever you get there? Sorry to interrupt.
Nope, that's exactly what I was in the middle of doing. Yep. All right, everybody. So that's the SPX chart, and I purposely wanted to bring that up. It doesn't take a mathematician to figure out roughly where the SPX, if we were to open right now, where it will open. And what does that look like compared to where we've traded to in the past down here? So you can see immediately that below the SPX 58.29.30 area, there was this looming gap all the way down here to the 57.84.85 area. That's where I drew the circle. And we know that the spread was trending. The spread will likely change a little bit at the open, but the spread as of the regular trading hours on Wednesday was roughly 44, kind of fluctuating 43, 44, half, whatever. So why don't we kind of just work off of that? So if you take where the SPOOs are, we're trading 59.12, right? We're down 32. All right, well, basic. I'm going to subtract 44 from that. That puts SPX right around 58.68.
And that gets equilibrated. There's higher
Oops, sorry.
And I think that's just a reflection.
That puts us down around 58.68. Guys, that's now if we were to open right now, we're in that purple rectangle down there. And that provides an area that the range all the way down to 57.21, 57.03, that is that trading range. So what I'm portending here is that if we were to open up in that area, and then we get SPX back above the 57.82, it's going to want to rotate back up to the 58.30 area. So that could be an interesting play. And as it is Friday, capital preservation, low volume Friday. So, after 10:30, it will get the volume. It's definitely, it's going to be dissipating. Okay. So just kind of keep that in mind. So then we have that low vol trade. People start opining, was this like an overreaction? Yes, the NFP data was hot. We've all kind of listened to everybody, what their thoughts are on that. There just needs time to digest that. But I just would suggest to you that if we get the SPX back above the 57.82, it's going to be a magnet. This is a very low volume area relative to SPX terms, back up to the 58.30. So you've got that's a 50 point range. Go ahead. Somebody. Oh, Ankle, you're on hot mic. Anyway, let's see here. So that's just something I'm going to readdress this at the opening to see where we open up and what it looks like. Okay. Let's see here. So now why don't we go to, I don't want to look at that. Well, you know what? Let's see here. Now, do I need to get out of that chart, or now I brought this other one? Is that now showing? That should be showing, right?
Showing.
Okay, good. So now you're seeing, I have this 15-second chart on the SPOOs, simply because I wanted to watch the velocity of the move in price, and I wanted to see possible acceptance and rejection of certain areas. Once we traded all the way down, you can see we traded all the way down to that 58.90 area, and we snapped back, and then we came back up. Smooth caught portion of that trade. Nice trade, Smooth. Caught that. He took his couple of good scales, came out. He got stopped out. We came down and retested that 58.88.90 area. Okay, so that's good. That's good. The market is defining us a range, a boundary. So that's what we want to see for any tradable ideas. And now we held this area 58.97, 5900. And I agreed with Smooth. I was late to the party, but I did get a small long over there, but it was small, it was not meaningful, and I was late to the party doing other things. So it was really we're not going to post a trade like that when we're already like 7 points into the trade or we've already scaled. Unfair to everybody else. So then I'm now just seeing this area that we're at with a 59.14, and we knew. So now what I want to do is I'm going to eliminate this technical indicator because it's just too distracting. And I want to go to a 2-hour chart. And I'm now, okay, there we go. And right away, I just have too many lines on that. I don't really care. I have to get out of it. So now, looking at a 2-hour chart, we can actually see that low area that was tested. Okay, so obviously we retested it already a second time pre-market. But you can see off the second on, let's see, on what day is that? On Thursday, 2nd of January. You can see how that's the beginning of that second blue 2-hour bar. 58.88 was a kind of a key area. So if you were looking for a key area on this breakdown this morning and you saw that, you were definitely, it was the area to be looking for some potential for a long. And Smooth caught it, and awesome for you. But so I just want to, so now that the data's already come out, the market's trying to digest what the prices and what the data really truly means going forward. I mean, the market's already in a sense reacting to that already pre-market. It's a separate thing of now, like, what is it going to do, when we open up? So if you're looking at just one-dimensionally only at the SPOOs, I'm seeing back up to the 59, 18, 20 area. That number, that 1820 should resonate with you because that was a key level that we kind of seem to be bouncing around and trading. Once we trade through, we get above, then we make a move back up, another 60, 70 points. You can just see that level. I mean, right there. I mean, all the way back to the 19th of November, it stood out. It continued to stand out. Sure, we had that nice flushes, for a good 30 points. Of course we did. But once you got above that 1820 area, the market wanted to go back and test higher. So the first area I can see relative, only looking at the SPOOs, would be back up to 59.50 area. We're at 59.15. Don't think, we get above the 1820 area. Don't think we can't have a rotation back up there. Because what's going to cause that is here we reacted off of the non-farm payrolls. And so that's really more relative, specific to interest rates and market health. And maybe it might not have been what people wanted because people wanted they wanted really just a tame jobs number. So we had potential for a bullish move. That's what a lot of people wanted. And then there's the realists out there. The data is what the data is. And if it's suggesting that we're going to have rates hovering a little bit higher for a little bit longer, and the Fed was off with its cadence, that's just the nature of the market. And that's not something we fight, and we don't try to figure out. That's not our job. But that just is a macro observation. That's pretty much what's going on. So what I was going to say is that as it relates to stocks, we're going to have a big downtick, with regular trading hours. We're going to find out, in 16 minutes, what babies are thrown out with the bathwater. What good stocks? The data was hot, but it doesn't mean certain companies are going to stop making money, and they're not going to continue to grow at the pace they were growing. It really would just be like they would have to just factor in, their credit, the financing of their credit. That's what they have to factor in. A lot of them, the high growth companies, they basically just outgrow it and they don't really care. They're generating so much cash. They're focused on their business and not worrying about it. So we're going to be looking for those opportunities. And the example would be is like, what sort of hit does NVIDIA take at the open? And is there an opportunity to kind of build back into a position? But because we had this big downtick, I'll be cautious with what I have. I've got some small call positions I've already scaled out of, and I have a good cost basis. I think my average basis with the 143 and 145 calls for later in January is about $3. I wouldn't be surprised. Those are trading at a dollar and a half at the open. If Nvidia trades down to 128, 130, I would, I wouldn't be shocked, but the expirations are much further out, so the premium will hold better, and that's why we do that. Anyway, that's my thoughts on the market. I'm going to be looking at the open, like how we open relative to where SPX and NDX are. I haven't really gone through the NDX chart. I mean, clearly we can see that's off 120. I mean, I mean, we're already coming back here to kind of match up with regular trading hours. So the open will be interesting. So I'm just going to sit and wait and watch what the market wants to do there, and I'm sure we're going to see a couple of nice trades here in the first 2 hours of the day. So with that, sorry for the lengthy spiel. I just kind of wanted to go back to a couple levels relative to SPX and where the possibility of where we're opening up, so you have it in the underlying indices terms. That is really key. With that, I will hand it over to Dan.
Morning. I just stopped out of the remaining of that position there. Break even trade at the end of the day here, but as everyone on my screen, so I brought up a 2-hour chart, and I brought this up because this was the Fed day on the 18th.
Says stream paused.
So 2-hour chart, Fed day on the 18th. Oops, wrong way. Fed, right? Bottom wick 5906. Retracement back to 6,000. Bottom wick down at 5866. Then we sort of retraced all the way back up, and now we have a wick at 72. Our low this morning is 88. I would imagine we're probably testing this area today. I think we need to test this area today. Looks like we're building out a bear flag here. I mean, this bear flag could go back up to 50, like Gov said. It could literally churn that high. So I'm going to be really cautious today. And I'm going to be really cautious because if we zoom out, get rid of that. We're still in this here. And 1, 2, 3. That would be a triple bottom there. It almost sort of is already. If we get through this area, right, and we're zooming out, there's not a whole lot from really 70 down to another 50 points lower. If we come back and we break this area down here, I don't think we have literally no support for 60 points. It feels to me like today has the potential to break down. Gonna need to see what bonds do. Bonds look like they're sort of building out a bear flag. The Qs look like they're building out a bear flag. Certainly IWM is. I'm not excited to get long today. Solely because of this. I mean, technically this would be the 4th time we touched down here. Every time you touch an area and come into an area, you're going to get weaker and weaker and weaker. So I would love to see it retrace even a little bit higher, because I think the potential for a significant flush out is there. The potential that I see on the upside that could throw a wrench in that is we've had this move. This is a daily chart. 1, 2, 3, 4. This is this week right here. So could there be some options on the downside that need to unwind and squeeze? It's a potential for sure. I could see it happening. But I really don't like this setup today until I have more information. I just don't like it until I have more information. I think it's a sketchy area we're in right now if you're long. If you're short, it's also a sketchy area because we could just pop another 20 points. But my lean would be on the short side today. Just because of bonds sort of continue. They found support where they needed to find support. Does that bear flag break down and push back down to lows from 2023? It's possible.
I was going to say, if we weren't opening in 9 minutes, I would be shorting this 1820
I
area.
couldn't agree more.
But because we're not open, like Dan said, I need more information for the regular trading hours. I don't want to get. I can get stopped out, but why waste the time?
I was able to get a short, and I got a scale and a break even on the upside. We rejected off 20. Let's go back to 1 hour. 20. If you look here, what 20 is right here. This is the breakdown. This whole area, right? We broke down. This is going to be pretty significant overhead. So I don't think right here is a bad area to be shorting. I really don't. I think that if we get over this area, you've got 30 points, but I think this possibility here, where is my brush? I think this possibility to come back down and sort of test this area down here is probably the likeliest scenario for today.
Do you guys all notice how Dan has slightly different methodology? But do you remember just 5 minutes ago where I was kind of beating up 1820? And did you see how he was focused on the 1820 and the significance of that? There you go. There's confluence with two different approaches. So that's really key for you guys. Hopefully you guys keyed in on that. That should demonstrate more value, significance of about a certain level. Sorry for the interruption, Dan.
I think that this is the most likely scenario. But I do give the possibility of getting through here and making a significant move up. So if you trade small, I don't think this is a bad spot to be short. Just know where your risk is. And I'm going to be watching that Micron. Micron needs to reclaim 99 ASAP, or I'm going to be out of that this morning. The other one, SANA, still looks good. The bond position, we got some great scales on Friday. So, the rest of it is what it is. Those expire the end of next week. So we'll have to see what happens there. But really simple for me today. Indexes are going to be the key. I'm going to be less focused on regular names. I want to see what the indexes do because we're in a really critical area, and I think we could have a big breakdown. Turn it over.
Good morning. All right, you got my screen. Let me take this off. All right, so a little earlier, before the news came out, I was kind of looking at this structure that we have here, which wasn't necessarily invalidated, but this wick down here gets us just a little below the 88 that is the max for this pattern. Again, doesn't
anyone else seeing stream paused?
Do you have my screen up?
Yep.
Looks fine for me. Oh, now it's paused, but well, I don't know why it says has minimized their application. I mean, that's just I don't
Try
understand
again.
it, but whatever. Sick of Discord.
Let me see here. How about now?
Yeah,
We back?
yeah.
Good.
All
You're
right.
good.
So again, this pattern has not necessarily been invalidated. We want to see this. Let me take my magnet off. Really around here, and we came just a tad lower. So be watching that low area to hold. If it doesn't, then we do officially invalidate this. If we start pushing in the SPY above like 591.50, that's the 50 Fibonacci here, then I would sort of have a little more confidence in this playing out. But, you know, the data that came out, you know, it's kind of in that good news is bad news category because, as Gov said, stronger labor market equals more spending, which equals inflation, which equals Fed no likey, and they're not going to be cutting rates into potentially an inflationary environment. So, which further exacerbates inflation. So that's basically why we had a little bit of a sell-off there, that initial reaction. But let's see how things shake out. It was nothing too crazy. So I'll be watching that. That's sort of bigger picture. Once we kind of zoom in into the ES, what are we seeing? Well, I have my Fibonacci's drawn just from this initial move, this drop on the NFP data down to the lows of the day. I've got my Fibonacci's drawn, and this is kind of what I'm watching. You can see we just tagged the 50 Fib and rejected for now. We have support at the 38, 1150. And then sort of zoomed out a little bit, we have some longer term Fibonacci's that are in play also. Let me see if I can just take this off for a second, make it easier to see. There we go. So that's this one down at 5901.25, which was basically what I was playing here this morning. I took a long once we reclaimed this level a couple times. These are sort of more zoomed out Fibonacci's from here. This is the same pattern basically I was showing you in the SPY. So to get back above this 59.2975, I'll be watching that level. We're about 10 points away from it now. And then this 59.6375 was a level I mentioned this morning is really key to get over for me to consider more of a longer term swing long. But right now the key below is this 59.01 1/4. Really have to hold that, and then obviously watch this low print of the 58.88. So that's what I'm watching today. I already got a few decent trades in this morning. So that was a little bit of a nice push up off of that reclaim of the 59.01 1/4. Actually, the best trade was probably the fourth attempt, which I didn't take, but we'll see. That's still creeping up. I can definitely see this coming up and retesting this 29.75. So let's see how that plays out. As far as individual names, nothing really too much on my radar. Nvidia, we talked about. This lost all of its key moving averages. I have a little bit of options long in that. It's probably going to be considerably underwater, but market's opening here. Hold on, let me flip back. Let's pop these Fibonacci's back in.
You know, when I was referring to the SPX, somehow I must have had some sort of handle off. So I apologize
So
because
if you're short, this is a good spot to scale here at 11.
Yeah, I'm short from 19. I'm down. I took some just small scales trying to reduce basis, but
And then 07 is the next area.
so
Yep.
this is a key. So for SPX is 58.72, 74. We're getting under here, and it suggests there's room down to 58, 30 to 40. So there's 30 points of downside there.
Now you're coming back into this 0150 level where you have a couple fibs there.
here we go, baby. Doink it. Can you guys hear me all right?
Yep.
Yep.
See if we can get my scale down to runners is at